What's going on, everyone? CryptoVatsik here with another technical analysis video for you today. As always, nothing of what you're about to see is financial advice, and if you enjoy this content, I would really appreciate it if you smash the like button and subscribe to the channel. Okay, right off the bat, you guys, Verasity has been developing this major macro wedge with the top band here and the bottom band here. So of course, right off the bat, I think once we break out of that wedge, we'll really take off. We have our macro accumulation zone in yellow here with our deviation below the range and multiple areas of opportunity to accumulate within that range over the past year or so. You will notice with the recent lower high, when we reclaimed that zone and broke outside above it, we've now successfully retested the upper range of that zone with a very bullish reaction so far. So in my opinion, price has accepted that level, meaning I don't think we will see price trade within yellow again for the foreseeable future. However, you will notice that Verasity has still been putting in consistent lower highs on account that we are still trading underneath this downward diagonal here as our resistance trend. What I would like to see in the coming weeks is essentially a consolidating pattern with a bit more tight price action above our macro SR level here, otherwise known as our demand zone now in the thin rectangle, which sits at about 0.006. So just as we got acceptance above our accumulation zone once we broke out to the upside, I want to see now acceptance above our macro SR level in the green rectangle with tight consolidation under our downward diagonal, and of course looking for that eventual breakout. Before I get into the daily time frame, I'll just point out our targets above. Our first target right here was already met and swept with this high right here that we had in February 23, and again over here in November late last year. So the most logical area to look at next comes from this significant breakdown level over here, denoted in the red rectangle. It's the next area of major support that was put in for some time, so it's naturally that next logical area of resistance to look at, and simultaneously it was that point of breakdown where once it lost that supportive shelf, price had a major capitulation event, 3 extremely bearish weekly candles. So between these two levels, I don't see much resistance, as this price action is a void, inefficient balance in price. We've already swept the local resistance, which came from these lows over here. So on a flip of that level, I think it's straight up to just under 2 cents as this target here. Now let's flip over to the daily time frame, and we'll just take a closer look again at this breakdown level. Okay, so this was our breakdown area, which formed that support zone for nearly 100 days or 92 bars. And there's no real significant clusters between that local resistance, which sits down here, and between that next target. No real significant consolidating patterns in that price action. Okay, so then let's look at the targets above. The next 3 targets are in these dotted lines right here, and of course our all-time high up here. Okay, so why have I marked out those as our targets? Well, it's very simple, and it's the same theory or same methodology as I used for the significant breakdown zone in here in red. It's just the next logical area in price history where price formed a shelf that acted as support for a significant amount of time, and or once it was flipped, acted as a significant resistance area, where otherwise price was ultimately just chopping around between support and between resistance. At the time, this being our support and this being our resistance. And then essentially just applying that to the next target, clearly an area of support for a substantial amount of time, and then our clear point of breakdown right here, where price then capitulated thereafter. And then our all-time high, which is pretty self-explanatory. So ultimately, when I look at this chart now, price has been trading ultimately within a large accumulation range for quite some time. And I know I've got our accumulation zone in yellow here marked out, but realistically, this entire zone, in my opinion, is still considered a macro accumulation zone because ultimately price has not made a higher high yet. You could argue that this was a higher high in comparison to these lower highs, and you'd be correct. However, I talk about these bear market ceilings where it will be extremely difficult for price to break out of. And it's very clear that we've got a bear market ceiling here on account that we've made a high and consistently thereafter made lower highs. And the ceiling sits at that local resistance here, which is suppressing price from moving to our next target. So in the grand scheme of things, getting involved for the long term in this zone, in my opinion, will still provide a good ROI. And you can just see it even with the exponential moving average. We've got the exponential moving average along here following price. When we put in our bottom, you start to see the moving average slowly kind of dip and rise and dip and rise. And when you see moving averages do something like that on high time frame, it usually marks our macro accumulation range. Because on high time frame, we're talking at least the daily time frame here, the moving average will not look like this in a bull market or in a bear market. And clearly it is still doing something like that until we ultimately take off. And my criteria before that takeoff is sitting right here within this wedge that we're currently trading in. Let's flip back to the weekly. Okay, so we're back on the weekly. Let's go to log chart. As I said, I want to see on even lower time frame some tight consolidation underneath the upper band of this diagonal. That will bring confidence to me that we are about to break out. We've been putting in steady higher lows off of our bottom. We had our pump, we had our correction, put in our next higher low. We had a pump, we had our correction, and put in our higher low. So very consistent, reclaiming resistance levels, flipping them into support, and all the while putting in a trend, despite us putting in lower high after lower high. So it's just a simple wedge in an accumulation area. We've now reclaimed this macro SR in green. Okay, this was an area of support that we tried to maintain, as well as an area of resistance briefly. So we've flipped that. I would like to see green hold, as I said. This is a high time frame, bullish reclaim, and on account that we do maintain green, I think it's only a matter of a short period of time until we break this downward diagonal, and at that point we will put in a higher high in comparison to these lower highs, in my opinion. So on the weekly time frame, we might get one red candle and then the next green candle to break straight out of this. But if you zoom in to the daily, you will most likely see a bit more of a consolidation pattern before we actually break out. So price might actually come up and sweep these highs, possibly even deviate, but I would expect more of a consolidation pattern or a correction actually, and then consolidation range of some sort before our breakout. In my opinion, we will not see price trade within yellow again at this point, unless something seriously unforeseen or a black swan event happens. But what I do think is that we could see green again, but that's just fine because as I said, I just want to see green hold. So ultimately, where's the demand? The demand is now in green, just as supply is up here with these highs. So we are coming into that supply zone, which should act as resistance. So then you got to ask yourself, where's the next demand zone? Well, on account that we've put in our higher low here, we're looking for that market structure break that we've broken. Okay, so we're looking at this lower high, and this lower high has been broken now at this point with a higher high. So you start to look at where that demand zone is. We've got a bit of a lower time frame cluster right here. Okay, so let's just drop down to the 4 hour. Okay, so we're on the 4 hour. We had ultimately this massive impulsive leg to the upside. We had a minor consolidation here, minor correction, same thing thereafter, minor correction, and now price tightening and you're going almost vertical. So in my opinion, on the macro scale, when you look at this high time frame, green just makes sense to me as a natural area of a retest. So zooming out a bit, you see all the interaction with that level. It was a point of breakdown here. It deviated, but ultimately resistance here, and then resistance again over here, and even support on this wick. So too much interaction for me to ignore that level. We will also drop to the weekly and just look at this. Okay, so on the weekly, you'll see that that is also in line with our weekly open. And one last piece of confluence is if we do put in said high relatively soon, let's take our fib from the low and to the high. Okay, so right here, we're taking our fib from the low and to the high, which has not necessarily been confirmed yet, but we are assuming that if there is a correction, the high is put in either where it is currently or near the top band of the downward diagonal. And you'll notice our 618 fib lining right within our green macro SR / demand zone. Okay, so that is if we put in a retrace or a correction, okay? It doesn't necessarily have to. The next weekly candle could shoot straight through this, but it's just about anticipating that correction that will provide a really good opportunity, in my opinion, for the next macro leg to the upside and reaching those next targets. Now, one other thing I'll bring to your attention that I always bring in my videos. I like to see the range EQ reclaimed as a sign for a breakout or continuation to the upside. So you will notice, let's take a range from this high down from its low, and we'll just make it thick and red. Okay, so we've got our range high, our range low, and our equilibrium right in here. So what do we see on account that we got our low to our high? We came down, we retested the quarter quadrant of that range. Okay, the quarter quadrant being in the upper half of the range and the lower half, okay, with our EQ in the middle. Price corrected and retested our lower quarter quadrant, and then it pushed up to our our upper quarter quadrant as resistance, but ultimately has now reclaimed the equilibrium in the middle of our range, okay? Which is a very significant sign and a beautiful bullish reaction. Okay, so that's kind of criteria 1 on this overall diagonal. We've reclaimed the macro EQ. Now, let's look at the current local retrace that we just got. We'll take another range from our high down to the higher low that we had right over here, and we'll make this range blue. What have you noticed now at this point? Same thing, off of our low to our high, price came down, retraced to the quarter quadrant of our range with a successful acceptance above it. And now you'll notice price slicing right through the equilibrium of that range. So as I said, the quarter quadrant in the upper 50th percentile of this range sits somewhere right up here. So we are naturally coming into an area of resistance. So it's going to be perfectly healthy if we do retrace a little bit back down to green from that quarter quadrant, or even if we deviate a bit above it, we'll just be coming up to this diagonal and ultimately that range high. So I do think a correction is coming. It's just a matter if it's going to be very brief on low time frame with, some tight consolidation, whereas on the high time frame, it pretty much just looks like it continues to the upside. So it's going to be tricky to manage. We're going to have to continuously monitor it. But even if we do get a larger macro correction back down to green, I think it's fine. It's perfectly healthy. We're coming towards the apex of this diagonal. So ultimately, price is going to have to make a decision sooner or later. And of course, I think that decision is going to be to the upside and come up to our next target that sits up here at that significant breakdown level until we start reaching higher, more elevated targets thereafter. Anyways, thanks so much for joining. If you enjoyed this content, I would really appreciate it if you smash that like button and subscribe to the channel for future updates so you don't miss out. And we'll catch y'all next time. Peace.